Oh, aloha everyone. Joshua Hayes at BigWaveTrading.com. We have a hurricane rolling in. It's the most threatening one in 26 years. I've only lived here 20 years. In the general vicinity where I live, Lahaina. So that being said, I may or may not have internet, power, whatever, come Friday, Saturday. I do not own my own backup generator. Probably should have done that, but not going to do it this time around. If anything happens, something happens. If not, not. Not too worried, but if you don't see me around, don't see any posts updated in a timely manner, I'm probably dealing with a hurricane. So with that being said, stock market isn't. We continue another V-shaped move. Unreal. It's just unbelievable to me that this can just continue to keep happening, but it does. Another V-shaped move to new highs. I can only assume that the market's going to want to pull back soon. Very complacent out there. Put call ratio has gotten down to 0.74. What I do like to see, though, is that the New York Stock Exchange advanced decline line, more new all-time highs today. So any pullback that we should see should once again continue the string of V down, V up, V down, V up. It's unfortunate, though, that we move like this. I'm just not getting any nice, long, beautiful, tight, quiet consolidation patterns with the proper accumulation and BOP to freak out. But that being said, heading into today, I'm about 90% long, only have about 10% cash. And even with the new long positions, I still haven't maxed out. I haven't gotten that message back that says maxed out with cash. So, it's pretty good, but it's still, there's a lot left to this imagination, but nice move with the Russell 2000 IWM. It led today. Nice breakout to new highs, above average volume. So not a whole lot to complain about there. I accidentally shut down my Interactive Brokers platform before making this video because I was having some hiccups with it. Did not open it back up. Not going to waste any more time. There's a lot of stuff I got to do to get prepared for this hurricane, so I have to do that. But bottom line is, not that many stops triggered intraday. And in fact, besides the SRTY hedge and a lot of those foreign hedges that I have like EEV, EFZ, and EPV that triggered today, there were about a handful only of stocks that triggered intraday stops. Excellent, excellent session. And on that note, 50% sell signal, there was only one, Corv, closing below its 20-day moving average on above average volume. There was only one 100% full sell signal on an end-of-day basis. SRTY. If I would have had my intraday stops up, you would have seen that that was hit early on, and that's it. But it's a full sell signal on an end-of-day basis. 8% loss on that hedge. Well worth it, in my opinion, in case this market would have had an ugly August, September. And to be honest with you folks, kind of wish it would have. It would have been much better had we consolidated sideways here throughout the rest of August and September and or trended lower on lower volume than do this, V-shaped move back to new highs. I mean, guys, this is a very ugly daily chart. The DIA and SPY. This is ugly. Ugly, ugly, ugly. I don't fight it, but it's ugly. I don't embrace it at the same time. Well, I don't fight it. If we reverse harsh, it will never surprise me. So with that being said, small measure positions in stocks that only offer at least a 4-to-1 reward to risk ratio. I refuse to put 5, 10, 20% of my account capital into any one new long position until we're either in positive seasonality, which looks like we're going to blow that out of the water if we rally into it, which means we could sell off during positive seasonality, which is obviously not what you want, and or we rally on above average volume. And I hate to tell you, the IWM being up on above average volume is not good enough for me. You can see the NYSE was below average, and you see the CompQ well below average. So we still have no strong accumulation in this market, so keep that in mind. New long positions, I'm going straight down as they flagged in my scans. TTD, Can Slim Quality Stock, confirmed in my Perfect Speculator scan. It's clearly extended, so I want to reduce it in half, but I am increasing size a little bit. So 1% of my account capital instead of 0.75%, I'm increasing it slightly with our breakout to new highs in the S&PY or S&P 500, whatever. Limit order 129.03. First cut loss 123.19. Final cut loss 112.26. KMG merging with CCMP. CCMP, I believe, has a 98 or 99 EPS rating. KMG has a 99 EPS rating. CCMP actually might have a 96 EPS rating, but KMG, they're combining, making a powerful company. I don't like the CCMP chart, but I can work with it using KMG. So getting along, 0.5% of my account capital on the ad signal. Slim quality was in my price volume BOP surge scan, max screen BOP of the past 5 days scan, 7670 limit order, first cut loss 7541, and for KMG here I'll use 7407, but really we're working with CCMP here because it's a cash and stock deal. So if CCMP goes below this lows, that should be with KMG. So I'm pretty sure I'm going to go ahead and forget about that 50-day moving average stop and just use that 75.41. Then KIN from the Perfect Speculator scan. Remember, I don't care if they're extending the Perfect Speculator scan anymore, if they're biotechnology. These stocks that look like this that I don't buy because I think they're too extended, they never reset up for me and they run without me. So I figure small measured positions. If it fails, no big deal. Limit order. 0.75% of my account capital, since it was also my price volume BOP surge scan. It's extended, so it's half. That's why 0.75%. Limit order 1470. First cut loss 1420. Final cut loss 1350 on KIN. Rare ad signal pocket pivot point signal for my Perfect Speculator scan. 0.5% of my account capital. Limit order 7935. First cut loss level 7491. Final cut loss level 6972. Then ESIO from my Perfect Speculator scan. Very strong EPS and sales growth, so it's clearly Slim quality. So instead of 2% of my account capital, it's got to be reduced since it's extended 1%. Limit order 2304. Be working with a few different stop levels, but I'll just go ahead and mention 2242, 2160, 2049. And then the last signal is a hedge signal in VIXI. Remember what I told you about the put call ratio? Very, very, very complacent. Another V-shaped move to new highs and no volume. And at the same time, I got a hedge signal from a VIX instrument. So I'm going to obey it. I have to obey it. Hedge signals are always a priority whenever we're V-ramping at new highs on no volume. They always have been. They always will be until we can U-shape, round out, flat base, then hit new highs with any kind of volume and or proper seasonality. I'm going to take the hedges. So I got one. VIXI, 1% of my account capital, 24.34 the limit order. My first cut loss level on this one will be 22.92, and my final cut loss level on this one, since it's a hedge, will be down here at 21.23. All right, everyone, I'm going to go ahead and wrap it up here. If the winds get bad, you're not going to see me. And if you don't see me, you'll be fine. All right, I'll see you if I see you. Aloha.